Core 3, 2, 1. All right. So Sunday, February 22nd, market outlook. We are live. So one of the first things I always talk about is going back over previous news from last week. So obviously last week, Sunday, we were here and we talked about President's Day being a holiday. We didn't see news and movement until Tuesday, Wednesday, Thursday, and so Friday. What did we have? We had ADP weekly employment change. We also had core CPI for CAD, NAHB housing market, right? FOMC members speaking. Let's see, Wednesday, building permits, housing starts, cool. Core durable items, building permits, industrial production, FOMC in minutes. FOMC members speaking, and then goes into Thursday, unemployment, Philly Fed, FOMC, goods for trade, trade balance, FOMC again. Wow. Yeah, Thursday was our super fun day. And then Friday, of course, we had PCE, personal income, and these were all the results. So if you guys noticed last weekend, what I'll do is I'll go over it on indices and gold, what took place. A lot of what we do on Sunday when we look at where the market's going to go and our analysis for the week, it has to do with news, right? So if we notice the correlation between when the market's consolidating and when it's not consolidated, when it breaks out of consolidation, always floats around news. So this was news from last week. Now let's fast forward and bump this up to this week to see what we have in store going into this week, right? So right now, it's already Monday overseas. Wait, let me make sure my time is. Oh, this is our next level of news right here. Right. So we have 7 a.m. USD FOMC member Waller speaks. Okay. Then we have 9 a.m. USD news factory orders. Cool. 7 p.m. CNY. Then Tuesday, we have 7 a.m. FOMC member ADP. Then we have wow, 1, 2, 3, 4 yellow folders at 8 a.m. So this is all before stock market open. And then wow, we have news again at 8:15 a.m. Again at 8:30 a.m. Okay. And three folders at 9 a.m. Oh, and then 220, 3:30. Okay, so off of the bat, New York session for Tuesday is going to be very, very, very a lot of movement, right? Because you have FOMC members speaking, then you have consumer confidence and manufacturing indexes dropping, and then we also have HPI and S&P backslash composite 20 HPI's yearlies. And then we also have ADP weekly employment change, and this is all within the morning. And of course, CNY, which has to do with China as well. So Tuesday is going to be very a lot of volatility in the market. Now let's look at Wednesday. Wednesday's a short day, which makes sense, right? Because if all that movement on Tuesday, Wednesday slows it down. We only have FOMC Barkin speaking at 8:30, then crude oil, that's fine. 10 a.m., 12:20. So Wednesday's gonna be smooth. And I'm gonna tell you how I'm gonna break my week up as well. Thursday, we have unemployment, FOMC member Bowman speaking again. Wow, he speaks a lot. Natural gas. And then Friday we have PPI and core PPI. So to break down kind of what this week looks like for news, obviously our major volatility day is going to be Tuesday, which means that tomorrow, Monday, may be a slow day. So Monday and Wednesday should be our slower days in the market. And of course, with PPI being on Friday, once we finish out, this is also going towards the end of the month. Remember, there's no February 29th or 30th or 31st, right? So this is the last week of the month. So, this week is going to kind of set the tone, kind of like what January did. I'm gonna show you what that looks like on the market, on the charts, right? So let me go to a blank pair and we'll start off with gold, right? So if you guys look, I still think it's forming somewhat of a power of three. But let's just go back to move myself out the way and let's go back to January, right? So this was the end of the month, January 29th. We seen that what out of ferocious sell off of 1,000 plus pips, 1,100, 12, wow, 1,200 pips, right? Or I actually more like 12,000, but it's cool, right? We saw this sell off to end the month, and then we started to see as we got into February price rebalance. So remember what I said from the first market outlook on this Sunday on the first, right? Is that we're going to consolidate most of this month. And then as we get to the end of the month, we're going to break out. And that's exactly what happened, right? We knew our support and resistance zones. If you notice, this is where we sold and this is where we've been buying, right? Now, I only take the sells, so these were all my buys. And then the last sell signal I sent you guys was when market opened and price hasn't come back yet. So that's already pushing almost 450, 500 pips. Right. So we broke out of our range, which is cool. This is expected, right? We talked about this all month, right? If you guys go back through the recordings, you'll see us talk about getting out of this range. And look, we've been out of the range. So now we have two things that's going to happen, right? News is either going to confirm that we're going to drive price, right, from where it is, maybe come down here and then rebalance and then finally make our way to 5,800, right, going into March, right? Or we're going to come back in here, consolidate until we get into March, maybe dip below one more time like this. So this is a consolidation. We'll dip back into this level of liquidity, right? It'll probably try to take out some more liquidity and then push up, right? And then once we close above 52.50, which would be right here, boom, price won't come back to this area. Those are two options, right? Now, in the most extreme case, right, with everything that they're talking about Iran, what's happening in Guadalajara and Mexico and how that could affect the US, relations and that whole spew. I mean, they're pumping out a lot of news that is important, like, I guess, morally, but in terms of economically, a lot of it is fluff that doesn't necessarily mean it's going to affect the market, right? But this is kind of where price will come down, maybe stay down here into like middle of March, and then we'll finally tap down again and then break out. So those are three scenarios. Now, this is, I don't think makes sense, to be honest with you, but it can happen, right? Because I don't see us consolidating for 2 months. That would kind of be crazy. And when we consolidate, no one makes money, not even the bigger institutions. So thinking from an institutional standpoint, right? Look at where we were right here. So we gapped up, I believe this is January 16th. Yeah, right here. And we saw the 21st, 23rd, 26th. We saw a huge rally, 28th, 29th. And then we started to see this false manipulation for us, which, caught a lot of us on the rebuy up that Thursday, 10 a.m. Then look by 2 o'clock, right? Now we go into that Friday and then whoof, right, the melt off. So right now we're back rallying into this area and it is the 22nd. So let's look at January 22nd real quick. So the 22nd, we're sort of above price from the 22nd, which is our last layer of support, which is nice. Right now, if we close tomorrow above, price is going to continue, right? And we're going to probably continue to take out the highs, right? If we fail to break higher, price is going to have to find one of these levels to retest. Now, do I see us going back to 4,400? Absolutely not. But this is still a major area that has a lot of liquidity left, right? And the next layer after 4,400 would have to be 41 and then 3,900, which would bring us right back to Thanksgiving. Well, back to November, right? During the government shutdown time. So the reason why I'm breaking this up to you is because you have to understand news is what moves and correlates with price. So once we understand what the market is trying to do, it allows us to figure out our execution. And when we figure out our execution, we also figure out how much money we can aim to make or how much money we plan to risk based on where the market is, right? So consolidation, you want to risk minimal because the market's only bouncing around. As we're starting to catch the actual direction, which is where gold needs to be in this 6,000 area. I mean, look, if you really think about it, from where it is now to 6,000 is less than the entire rebalance that happened in a day. So it's not unrealistic, right? It's just what is going to drive price to that area. And right now, price doesn't look like it's losing any momentum, right? Especially with the 4 hour about to close bullish, right? Our goal is to be like, hey, we need to find a rebalance that comes back into our discount, right? Even the buys that are in the premium right now, once price closes, we can redraw our premium and discount. But any buys in this area is still risky, right? We still need maybe one more retest into this area before it goes, right? That would be ideal, but obviously we can't predict the market. We can just react to it, right? So, going on to the next level of perception, right? Let's break this down now on the hourly time frame. So I sent that trade here, right? Or market open and it took off, right? So we're out of this range for right now. Now you guys see this nasty wick well, it was a nasty wick, but we bought on this Friday. This was that Friday 10 a.m. right here. This is what we want to avoid, but we want to wait to happen. And that's what was the holy grail about 500 pip wick insanity, right? Happens 520 pip wick. So when it comes to understanding what we're looking for, or we want to see these type of rebalances because it's giving us confirmation that price doesn't want to go lower, right? When we see price stay in an area too long, it kind of gives us, think of like when you're antsy because you don't really know what's going on. We want to see these confirmations on the higher time frame so we know where price really wants to set. So if we push up and clear to 5,200, we'll probably push into 5,280, 5,300. Once we break above 5,400 with a close on the daily time frame, we'll be good, right? But that's still not impossible, right? To shoot, right? That's only 221, so about 2,000 roughly. Not impossible, right? And remember, this is the last week of the month. So everything that happens will be based off of manipulation, right? And then look, we can also check something as well. Um, I think we should have is it a State of the Union this week? State of the Union address, February? See something. We should have something. Some type of okay, let's see. President Trump. Wait, what? That doesn't make any sense. This is February 24th. Oh, that's probably what it is. February 24th, 2026. Okay, see? Yeah. So this is perfect, right? So when you apply the news with what Donnie says, it's going to go hand in hand, right? So I'll probably use tomorrow to do more research to kind of see what's in the wind. But I always like to say, like I tell you guys, it's nothing wrong with searching on Google because trading is all based off of information, right? We're not it's skill, but there's information that goes with it. Um, War interests, February. Let's see, February 2026. Boom, pulls up all the different things that's been in motion. Like, look, the war is coming home to Russia, how the CIA MI6 got a hold of Putin's Ukrainian. Look, this is stuff that is happening that we don't know. Like, I didn't know this. Like, these are all recently. 4 years of war, no end in sight, the Big 512, Russian offensive campaign assets for 3 days ago. Um, so I'm gonna do USA. As of late February, the United States is in a heightened state of potential conflict with Iran, right? With President Trump signaling a possible military strike decision. Large-scale U.S. military assets are deploying. Wow, see, this is right now. Deploying to the Middle East, while diplomatic and military leaders are debating the risk of a wider. Key developments in February. See, this is why I said sometimes just hop on Google. Look at this. Look at the time frame. All right, so crisis, the U.S. has moved significant naval power, including the USS Ford carrier strike group to the region. President Trump indicated a decision. Wow, listen, Trump decision on strikes could come around. Look, this week, depending on Iran's response to demands regarding its nuclear program. This is the only statement I need to read for this week to understand where the market potentially may go. Right? War means not necessarily good for the dollar, means price of gold should skyrocket, right? But it may not, depending on how this correlates. So this is why we have to watch. But look, this is Google, AI, Google telling us what's happening. Now we're taking this information and correlating it with the markets. That also means on Tuesday, the 24th, when Trump does his State of the Union at 6 p.m., which is now 7 p.m., which is now market open. This is while he's doing this once gold is open. It's kind of crazy the timelines, right? These are things to look out for. Um, opposite opposition to conflict. Some Democratic lawmakers strongly oppose preemptive strikes, arguing they endanger personnel. Obviously, analysts warn that conflict could spike. Look, information's here. Oil prices and complicate the Federal Reserve's interest rate strategy, particularly as the U.S. is already facing. Wow. So dive deeper. Let's just see what's there. As of February 22nd, the United States primary focus on escalation in the Middle East, major nuclear treaty, the buildup, Russian nuclear. Okay. Wow, this really went deep. Right. Oil prices, tensions in the Strait of Hormuz have caused oil prices to rise 10% in the last week. Interest rate risk. Okay. Now watch this. How does this affect gold? Right. We know how it is, but let's see what it says. Okay, cool. Boom. See, since February 2nd, we're up already almost 12%. Gold has experienced significant volatility this month, driven by the looming threat of U.S. military strikes against Iran and trade policy uncertainty. It's traded at 51.82. 51.82. We're not even there yet, but okay, perfect. At least we know where gold's going, 51.82. So look, the market's not even there yet. That literally just look, 51.82 per ounce as of February 22nd. We haven't hit that price yet. Right. But that's it's gonna give you the calculation, but no, realistically, 51.82 is right below 5,200. So monthly trend price began February around 4,600 and surged over 11% as Middle East tensions reach a boiling point. Recent peak gold futures reach a session. Oh, yes, it's futures that is at that price, which is ahead, which is okay. Approximately 50. Oh, wow, 51.94. So I said 5,200. So look, I mean, this is important, which is perfect. Weaker than expected US GDP data and sticky inflation. UBS projects gold could reach six. Oh, look, there we go. Look, future outlook. UBS, Goldman Sachs sees a potential rise to 5,400 by year end. Analysts exchange in the Middle East could send prices towards 6,000 overnight. Well, don't do that without giving us an entry. Um, sectors of stock. Now, watch this. Will gold rebalance for 6,200 before 5,200 price. And I'm showing you guys what I do on a daily basis as I show you. You want to deep dive. You want to see what you can find, right? So it just helps to confirm your analysis as well. So check this out. Look how interesting this is, right? It's been a tug of war between extreme geopolitical fear and technical profit taking. Price discovery. Gold is trading at look, it's putting less than 0.4% away from the 5,200 mark. Recent high, it reached a session high of 51.94. That's so crazy is saying this, and we haven't seen it on the chart yet. but it's based on different exchange, right? A short-term pullback is possible due to several technical and fundamental triggers. This is what I love to see. Liquidity vacuums. Earlier in February, gold experienced a flash crash from 5,100 down to 4,900 in under an hour due to systematic selling and a brief contraction in the war premium. War premium is where we would sell, right? Premium discount. Technical exhaustion. After gaining over 25% since the start of the year, some analysts at UBS and JP Morgan, right, which are big companies, expect price to ease modestly or consolidate as traders lock in profits from this historic run. Resistance zones, beautiful. Significant technical resistance is noted between 5,160, that's what I just said, and 5,200. A failure to decisively break 5,200 could trigger a mean reversion move back toward 5,000 to 50/50 support. Thank you. And it gave us the article on it. Let's look at the article. Beautiful. Okay, so look at after touching a psychological milestone of 5,100 per ounce early in the month, gold spotted prices plummeted toward 4,900 mark in a matter of minutes, leaving investors questioning the stability of long running everything rally. However, as of February 18th, the yellow metal is staging a resilient recovery by the U.S. Consumer Price Index, which is CPI, yeah, data that has signaled a potential shift in the Federal Reserve's hawkish trajectory, right? The current market turbulence marks a critical juncture for investors who have ridden the wave of a massive revaluation in hard assets. With inflation cooling to a four-year low of 2.4%, the narrative of higher for longer interest rates is being challenged by a cooling cost of living index, even as the US labor market remains stubbornly robust. This push and pull between a decelerating CPI and a resilient workforce has created a perfect storm. I love that they put that in quotes of volatility where algorithmic trading and shifting geopolitical risk premiums have turned gold into a high stakes battleground for bulls and bears alike. Yeah, this is beautiful. This is why financial content market minute. So that gives us enough back end to see that price is still within favor, right? And what it's happening. So look, in short term, all eyes remain on the upcoming Federal Open Market Committee minutes and further labor market indicators. If the Fed acknowledges that the 2.4 CPI figure justifies a dovish pause, gold is likely to challenge the 5,200 resistance level before the end of the first quarter. Traders will be closely watching the 50/50 support level. A sustained close above this mark would signal that the flash crash was merely, which it was, a technical correction rather than a fundamental change in trend. This is how you read news, right? To correlate with what we're looking at. Strategic pivots are already underway among institutional asset managers, right? Those big banks. Many are moving away from pure play bullion and toward royalty and streaming companies, which offer exposure to gold price with less operational risk than traditional miners. Additionally, the emergence of AI-enabled gold, I didn't even know that was a thing. AI-enabled gold exploration technology is beginning to create a divide in the mining sector, where companies that can lower their exploration costs through advanced robotics and data modeling are expected to significantly outperform their legacy. Oh, that's crazy. They have AI-enabled gold technology, so that's going to kill the mining industry. Oh, well, I mean, shit, that's crazy. See, as you're reading, you're learning more. So this is just all extra information that allows us to say, okay, cool. And look, as we're talking, this is gonna go to that 50, that 51, but no clean entry without insane stop loss. 51.87. That's what it said, right? So it was basically already there. 5,200, 220 pips from 200 change. Yeah. Right. So that means now we can jump over and look at US 30 probably selling. So, yep. crash into the floor, right? From market open, where did the market open at? Yeah, so that also means that we're gonna get out of this consolidation range as well. And look, we've been swinging US30 all month from with scalps back and forth, right? And it still swings because it's a nice range. But look, this is all US30 has been within these trajectory range. Look, from literally January. Look, we broke out into that February, we dipped in, came higher, and then we've been consolidating from February 12th. So for the half the month. And then look, price is finally dropping. So one thing we can look at is we're gonna see US30 potentially sweep here, retest, and probably sell back into over here. So I got to drag this level out so we do this next market outlook, right? Or we're going to see price sweep from here and then finally peel up. But this is not going to necessarily correlate because if we're expecting the dollar to crash and indices to kind of drop out of this range, right? Because we want to see gold go higher, right? So on NASDAQ, two, 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 two. On NASDAQ, we've been more out of range from February, but this has been the range for the whole month, right? It's only taken the low twice, and all of this was just building up. So price is now obviously dropping. So we want to see price take out this low before going higher, right? And coming back to the draw of liquidity up here, right? But with the way the market was moved, we'll probably dip if it really wants to take and dips into here, we'll see it come down a little bit further first before going back up. Right? The same thing on US30. Right? But if it doesn't want to take out the internal liquidity right here, it'll just tap it, wick, and then start to make its way back up. Just the same with the US30, it'll tap into here, it'll be a wick, and then it'll make its way back up. Now, with the news that's dropping, we don't be surprised if you see a long wick that price literally comes all the way down to here before going back up as well. Right. So the good thing is we're gonna go into the last month of the quarter, which is great because if rates and everything are going to move, they need to move this month coming up, right? So March is going to be a beautiful breakout month, which is cool. January expansion. That's why I said it's like a power of three, right? So if you were to break it down, let's say like do it here, right? And we're gonna say power of three. January was your expansion, which is normal. February was your manipulation and consolidation. And then March is your distribution and continuation into Q2. All right. So a little bit different on the power of three angle, but that's what we're looking at. Right. So we're breaking out of the manipulation consolidation. And we're gonna see where price distributes. And if we're in by going into April, May, we should be well at 6,000, 6,200. If we're past that, if we get to 7,000, I mean, shit. I mean, we are really in the hot seat, and there's a lot that's gonna be looked at. So that's just kind of the overview of just where things are in the market, and one of the reasons why this week is super important. And just like any other market outlook, the goal is to preserve capital, right, as a trader, so always make sure you have your stop loss. Obviously, follow your risk management, right? And just keep in mind the news that we have this week, So like even personally for me, I just close out my trades for today. Maybe I'll see something going into London, but Monday is pretty flat, so I'll sleep in. Tuesday, I'm definitely gonna trade news. I love to trade in news. Wednesday, relax. Thursday, yeah, Thursday, probably relax. And Friday, this is PPI. This is, we're gonna know the direction of going into February. I mean, going into March. So, yeah, smooth week, but that doesn't mean there's no setup, right? There's gonna be setups every day. The market's gonna be volatile. Just remember, try to find your 1 to 2, 1 to 3 risk to reward, and you know, it's okay that if you miss this, it's okay, right? Price at wherever price is, it will always find a way back, right? So this is possible. Don't worry. Like I said, the market just opened up. We still have Monday, right? We still have to see how this week goes. So don't be surprised where you see price comes back into these areas in the low 50s, or even 50.99. I will 91. That's why I marked 91 right here, this order block, before it goes back. Right. So there's gonna be opportunity. You just gotta sit on your hands, be patient, and do not no one should be buying up here. The market's already gone. Don't buy up here. Don't risk your capital and don't risk your account. It's okay. There's trading this forever. There'll always be another trade. It's okay if you sit on your hands and wait until March. I don't blame you, right? Just make sure that you're following the right execution, right? And of course, I'll never send a trade I don't take. So if I'm sending a trade, I see something I like, I'm gonna send it. But other than that, you know, I hope you guys, yes, yeah, facts, sit on your hands, saying this week, go do, whatever your routine is, like go do, like catch up, like last week was crazy. Yeah. I was losing my mind. I was like, man, I can't do anything. Market's just moving. So if this week is slower, this week is slower. It's okay, right? Because you want that. The market can't just be on a run all the time. It's not possible, right? So use that time, study, right? Tap back into your notes, go through your notes, look at your previous setups, look at your market structure, just sharpen your skill. You know, Obviously you guys know I have the passion for this. I mean, shit, I have passion because this thing pays. Like it's kind of like crazy, right? So sharpen your skill set, right? And just keep learning. There's nothing wrong with education, right? Keep learning and researching, and you'll start to see it just as clearly as, I do. And then you'll see why I'm saying, hey, some days sit on your hands. It's okay. You missed a trade, it's perfectly fine. This will outlast anything, any job, any structure. The markets will not go anywhere. Even if the world ends, the markets will be there. So trust me, someone is going to be buying and someone's going to be selling when the world is ready to end. And that's just the reality of it. Um, so any questions, if you guys want to shoot any questions, any peers you want me to go over, I'll do that for the next 2, 3 minutes. But if not, we can call this a wrap. Let me look at Bitcoin. Yeah. And then look at JBY. Oh, whew. Man, I know them big. Oh, look, all right. So look, Bitcoin. This is clean, but I honestly, if we go below 59,000, just stop. Just full port whatever you got because that's just crazy. Like, damn, bro. I know so many people holding crypto. Like, I'm guilty myself, but I don't invest like what I plan to use in crypto, so it's cool, but holy crap. This is one insane correction. Like 40,000 in a month is like insane. That's a drop. Um, I mean, from a technical standpoint, if this closes like this, you're gonna see a nice little wick into the 55s, probably for sure. Let me see something. Let me check the daily. Hold on. Woof. This don't even look like a buy model. This just look like straight slaughter, right? It look like it has honestly, but no, it's cool because the market just opened. So hopefully with news tomorrow, it'll push it up and this turns into a wick and it'll start to rally, finding that using this as a level of support to then go higher. That would be nice, but sheesh, that bad boy opened and said, whoop, yeah, we out. But if buy the dip, and put your reserve stop loss at 50. If it goes below 50, I don't know. 50, yeah, like at that point, crypto is just a different animal. Like I thought gold was volatile. Yeah, nah. That would be like let me just look on this on the month. Yo, see on the month it don't look bad because it's a wick. It look like it'd be a wick, but if it comes down, you're coming back to like, yo, that's crazy. 2024, 2021. Yeah, sheesh. I'm not gonna lie, being a Bitcoin holder, they put you through it. Not gonna lie, you went all the way up to just come right back down real quick. It's only been, look, that's yeah, November to now. Sheesh. He was just at almost 130. That's crazy. That's a damn near half. That's a 50% correction for sure. Now if Bitcoin moved, like the fact that this is a change of structure right here. Mm-mm. Like if this takes here, I don't know. That would look crazy. But hey, to each his own. US JPY should be consolidating. Yeah. Let's see what's up on the hour. Okay. So cool, broke. Took out internal liquidity right here. See, I like sells, but I don't like selling just on certain things. But this is, yeah, this should be correlating right now. It's finding support into here, but it closed below this order block. So hmm, that means it needs to find another level of retest. Now let's see on the 4 hour, but that's on the 1 hour. On the 4 hour, we're in, we're filled into some liquidity right here. So once this 4 hour closes, we'll see. You should see where that support level lies. Because right now, look, it's in the middle. So when I say in the middle, if I was to do my fib, swing high, swing low, look, see, yeah, I don't have to measure it. I can see it. It's at the 50%. So all that means is this is premium for selling, and this is discount for buying. So it's in these areas, it's indecisive. So you have to kind of wait to see where price breaks. If it goes lower, you'll look for the buys. If it comes back up, you'll look for the sells. Boom. So it looks like that, right? So you know where your premium is, you know where your discount is, and you'll just trade within the range until price breaks out of structure on the higher time frame, either taking the lows, which would be right, taking these lows or taking the highs up here. Yeah, but no cap. Don't be afraid to sit on your hands this week. End of the month. It's like, like when you drive sometimes and they got the boys outside and they got to meet that quota. Same thing with trading. Just, just be careful. That's all I can say. For the end of the month, like middle of the month, yeah, y'all can go crazy. End of the month, they got the boys outside. You just gotta be careful, man, because them tickets go add up, right? So the market, oh, they want their money back, So and UJ actually look nice. I might start trading it. Nah, I can't. I gotta stick to my baby. But nah, this is UJ actually. Wow, this is a clean price action. Hmm. All right, I see what y'all doing with UJ. Yeah, stick with that. That's actually pretty clean. Bet. But I hope you guys got some value. I'll continue to update you guys. And like I said, we just gonna wait, right? Sometimes no trade is the best trade to take, right? So I hope you guys got some value. I will see you guys soon.